Good afternoon, traders, and welcome back to our Hot Stocks Outlook for April 13th, 2018. Hope you're all doing well in the financial markets. And as always, we have a lot to cover. We're going to really focus quite a bit on the basic material energy sort of space here. Now, we've really seen a lot of strength. We see you have Apache here, HollyFrontier, and Methanex. So a lot going on in those sectors. Also look at biotech here with Alnylam Pharmaceuticals and also Boston Beer, which we covered last week, and a really great opportunity to really highlight how these forecasts update as the markets trade and move forward. But starting here with Apache, what we're looking at are daily bars and candles going all the way back to really the beginning of March. And you're going to notice a lot of similarities. So we actually have a scan that can run through and find fresh crossovers and fresh opportunities in the market. It's really what's directed a lot of attention to, again, this basic material and energy space. And what we have here when Apache is a black line and a blue line against those daily bars and candles. Now, the black line that you see there, that is a actual or simple moving average. So it really just summarizes the past prices, averages them together, but it acts as a very good baseline to compare this blue value, this being a predicted moving average generated via the artificial intelligence found within the VantagePoint software here. So to plot that level, the software is looking at things like oil prices, other competing energy companies, ETF groups that may have an influence and effect on the target market, in this case Apache, that you're trading. Now, in addition to that predicted moving average, we're also provided a highly accurate 48-hour indicator. So we can think of that as looking ahead 2 candles at a time and letting us know about strength or weakness in the market over the very short term. And we're also given a predicted high and low. So actually an intraday levels to go ahead and set limit orders, trade from those levels, and set your profit targets as well. So what we have here is really a crossover all the way back here. You see it's very, very narrow, but that predicted average comes above your actual average, and this would come through those scans for fresh opportunities where trend reversals are looking to take place. And we're seeing that, again, a lot over basic materials and energy stocks here. So what we have is that blue line crossing above the black line, signaling the trend is now up, and you also see a lot of strength from the neural index, confirming that trend as that crossover moves above the actual moving average. And as long as that blue line remains above the black line, the trend is up. However, of course, as a trader, you want to know when to hold out on your position, when you should add to your position. And that's why we can utilize this predicted high and low range. So if I actually bring up our predicted highs and lows against the actual trading days data, so before those days occur, all these levels are known, you really see how this works out of indicating, look, the trend is now up, look to get long, but certainly you may want to wait on these predicted levels to get hit for great intraday entries into the uptrend. Again, as long as that blue line remains above the black line, you want to remain a buyer here. We have 1, 2, 3, 4, 5, 6, 7 entries into this market over really just the past month of time. But you see, this has been really a great opportunity to go ahead and look to get long these energy companies. And we really see this pretty broadly over the space here. We see Apache up about 12% from where that crossover and where that predicted low would have gotten you involved with this trend and in the market here. So really nice opportunity there, but look at the similarities in these charts so you can really understand, again, when a big sector rotation or a really larger move over the broad sector is starting to cause a lot of stocks to move into uptrends, you really be aware of those conditions in the market. So here we have HollyFrontier. Same thing at the beginning of March, getting all these crossovers coming through and signaling that the trend is up. Look to be a buyer in the market. But what I really want to highlight here is how the software helps you adapt. So you understand some short-term weakness over the next couple days may come into these markets, but the trend is still very much to the upside. As long as that predicted moving average is holding above the actual, the trend is still up. You want to look to be buying on dips and getting involved in the trade. Here we can, again, bring up those predicted high and low levels, and you see, again, how the software adapts moving forward. So, the fact is when the crossover comes in back here, you want these updated levels so that you can manage the position appropriately. So, be taking profit at your predicted highs, trying to buy at the predicted lows, but again, being very efficient with your trading decisions and where you decide to get involved in a particular market. So again, you see 3, 4, 5, 6, 7, 8, 9, 10 or so entries over the course of the past couple months that have been, warning you that, look, the trend is up. You want to be long, and buying at those predicted low levels would make really the most sense here. So what we have here is a really nice move, again, all through these basic materials and plenty of these energy companies. Market's up 21% just in the past month. And, this is a great place to be trading when you see things like big tech and big financial actually moving into, downtrends over the past several weeks. Instead of getting aggressively long some of those companies, there's other things opening up where the forecasts look a lot stronger and make sense as far as the markets that are more likely to move into uptrends here. Here's Methanex. Again, very clear crossover at the beginning of March. As long as that blue line, again, remains above the black line, you'll get these periods of sideways action where that neural index goes down to that red configuration. But you see how the trend is still very much to the upside. Once all these indicators are in agreement, really likely to get that bigger move over the course of those trading days. But of course, you want to be getting in early at the right times and holding out on those positions. So again, we'll take a look at our predicted highs and lows. And of course, when you're really making those determinations early in a trade on where do you want to get involved in the market, these things are updating for you to let you know, look, hold out for these lower levels over the course of this time. And, don't be chasing markets when you see some short-term price action that looks favorable. Wait to get those appropriate levels, and it'll really minimize your risk on the overall position that you may be taking. But about a 20% move to the upside, and again, several opportunities to get involved with this trend. So you see a couple entries back here. Trend starts to move up. You can buy on this pullback here, 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 here. Again, about 4 or 5 entries to really get you involved with this longer 20% move, knowing that, look, the trend is still up, maintain your position, and look to be adding to your trade there. Here, pharmaceuticals, again, some of these companies doing well, others doing quite poorly. But if you want to hedge your portfolio and find places to short, and then, of course, manage those positions effectively, really see how this works out. Neural index really holding to the downside for the bigger portion of this move. Predicted moving average very clearly signaling that this trend is this market rather is in a downtrend. You again want to bring up your predicted ranges to help guide you. Okay, where can I look to take short positions in the market? You see how this works. The market gaps up, immediately trades lower, hits this predicted low. The trend is still very much down. The neural index forecasting weakness in the market. Even over this period of time, you can go ahead and short up at these levels, target those lower predicted low levels for a shorter term trade, knowing where you want to add to these positions as the trade moves forward. But this is a huge move. If you'd been long here, you really want to be getting these forecasts that suggest, look, the trend has now reversed. Look to go ahead and actually short the shares or certainly sell any of your long position. But this down 31% in just 12 trading days. And you just see how these forecasts really update. You get your neural index up at a 1, you get a little strength, and the trend obviously not moving as down as it was before. Things go a little bit sideways, but still the overall direction here very much down, and want to keep holding on to that position until you get a predicted moving average crossing above your actual moving average, and it may be a good time to go ahead and cover that. Boston Beer here, we covered this actually last week. But again, I just want to highlight how it's important to utilize these tools to manage positions moving forward through time. It's not about just getting in and getting out of the market. You want to be managing a position, know when to hold on to your winners and stay in the market and keep buying and keep pushing a particular trade idea you may have. Here in Boston Beer here, crossover to the upside. Numerous opportunities to go ahead and get long, but really just over the past week, you really see how this works out, where if you're looking for a place to play strength in the market, well, if you know the trend is up, you know that your neural index is supporting strength over the next couple days, you can use those predicted highs and lows as guidance. So if we really just bring those in over the past week, you see how these levels update over time to help you get really a better entry into the market, be more efficient with prices that you accept. So we come lower, tap this level, and a really nice move from these levels that, we really highlighted this market a couple weeks ago. Just another 8.6% just in the past 4 trading days from that predicted low level. You see getting into the market at the latest really back here at around $180 per share. Some of those predicted low levels getting hit there to get you involved in the trade. But again, you're going to know where to manage these opportunities, when you should keep adding to your winners, buy at predicted lows. and ride that longer term trend. So you see just a really nice move here, but plenty opportunities along the way to understand where you can add to that position and get involved. You see, a little over 20% here over the duration of the move, and just 8% just over the past week, adding out that strategic predicted low level there. So again, really nice opportunities. We're getting a lot more variation between companies. Some things are doing well, some things are trending lower, and it's a really good time to be taking long and short positions in your portfolio. But of course, managing them over these really volatile periods of time that we have in the market so that you are buying at the best price possible, taking your profits along the way, but then also knowing when to hold out on your position and ride a longer term trend. So as always, guys, best of luck to the traders out there in the markets. Leave any questions that you have below. Thank you all for watching, of course. And once again, this has been our Hot Stocks Outlook for April 13th, 2018. Best of luck. Thanks again, and bye for now.